Well, good morning, everyone, or is it afternoon? Now, today we are looking at the dollar index chart here. Recently, we have been tied up in a range, as you can see, the one that is highlighted in a box. We have been ranging since May 2025, and now we're in March. No, we are in Feb. Sorry, 2026. So, as you can tell, it's been quite in a range for quite some time, and in a way, we kind of like broke the range. Yeah, we kind of like broke it, as you can see. Now, this is a very strong Morabuzo. I think that's what it's called, a Morabuzo candle. Yeah. So, with this candle, it tells us that the selling pressure is already mounting up. Okay. So we broke away from the trend line and then we are retesting the trend line, as you can see. So if we were to go down to a lower time frame, maybe like the daily, you can see we still have the selling pressure piling up. Yeah, because as you can see, this is what do you call it, bearish engulfing candle, and already the higher time frame trend, it's facing down, as you can see. It's going down. Now, what happens is that we are going to wait for a confirmation come Monday. But normally, what happens on Monday, you shouldn't trust it very much. But come Monday, we are going to get a confirmation of whether this is going to trickle down. When I mean trickle down, is it going to drop to this level right here? That is a 90 level. Or are we still going to sustain inside this this range? Okay, so for you to have a confirmation, now you need to be conversant with you need to be conversant with the Elliott wave principle. Now, what the Elliott wave principle tells us is we are going to first have a fast wave downward. And then what I like to do is to come on lower time frames, and it's going to be something like this. Okay. And we're going to have a pullback. Now, it is during this pullback that I will be looking for an entry. Okay, it is during this pullback right here that I will be looking for an entry, and that entry, it is going to drive the price all the way to the 90 level. Okay, so having analyzed or having an opinion as to how the DXY is going to play out, the best place I come next to look at Euro USD. Now, Euro USD, it's inversant of DXY. So as we can see in Euro USD, we broke this trend line. We came back and retested it. Okay, so this speaks a lot of volume. Now, if we are going to sustain outside this trend line and outside this range, Euro USD is going all the way to the top. Yeah, Euro USD is going all the way to the top. Okay, so that means we are going to be selling the dollar. If that is the case, then what happens with gold? Now, when you come to the gold chart, as you can see, gold has been in a long-term uptrend, yeah? So, despite what happened uh, the last 2 weeks, as you can see, the market has been very busy. You can see it went all the way up to 5600 and then it crashed. Okay, now to many this might look like a reversal, but that's the untrained eye. But this is not a reversal yet. What gold is doing, it wants to retrace back. People are offloading their open positions. Now everyone who had an open position, they are looking for profits. Now this is a result of profit taken. Okay, now if we look at the daily candle and we see this is Friday, that is Monday, okay, Thursday, Friday, and even Monday, it was dropping. People are offloading their positions. Okay, now if we were to go to the calendar and just see what happened on Monday, what happened on Monday, Friday, and Thursday. So Thursday we had consumer confidence for the Japanese yen. I'm looking for major news. Major news. That's what really shakes up the market. That's what the big dogs look at. Good. Now we have the balance of trade. Okay, so mainly the U.S. normally runs deficits on trade, but that can be something to look out for, and it's very critical to look at it. So what you see is that the forecast was 40.5 billion USD. That was a forecast. Now this is what a collective team of economists sit down and they conclude that this is where the balance of trade should be. But it came out at 56.8 B. So this is better than expected, because normally you can divide it to better than expected, as expected, or worse than expected. So this is better than expected. What this does is it catapults the USD. Now, this is what led to this bleeding effect. Okay? Now, what happens is that